what did you make of it?
Well, not a good session for the Australian market, and it was the material space which really dragged our market lower. We did see base metals falling quite heavily overnight. Copper prices were down by 1.6%, lead prices down by 4.5%, and gold prices down by 1%. So it should come as no surprise that we saw BHP down by 1.7% and Newcrest down by 1.9%. One stock which bucked the trend in this sector, though, was Fortescue. It managed to put in a positive performance for the day, but overall it was very much a typical risk-off day where we did see those growth areas being sold off and the defensives outperforming. So if we have a look at the areas which ended in the black, they were the healthcare and the utility space, so very much defensive sectors. Retailers in focus with David Jones, Kathmandu, Oriton all coming out with results. All three of these stocks falling today. Kathmandu was the worst, they're down by 16%, but also in that retailing space there were a lot of retailers which bucked the trend in terms of share price performance. We saw Pacific Brands up by 1.6%, Breville was up by 3.6%, Super Retail was up by 0.5%, Pacific Brands managed a gain of 1.6%. So unfortunately it was a bad day for Oriton, for Kathmandu as well as for David Jones, but the other retailers really holding up fairly well.
We're going to go, and in terms of the hope for it wanting to get back to where people would like to see, I mean, it's a long way off at the moment. It's languishing around that $33, $34, $35 mark. Some people we've had on the show say they would only maybe be a buy at BHP Billiton at $25.
If we have a look at BHP, it is down more than 20% from a year ago, and that's the same with Rio Tinto. And while we are seeing strong growth out of China, remember in the last couple of years we've been pricing in 12% growth, and now and then that went down to 8% growth, and now we're pricing in 7.5% growth. So those lower rates of growth feeding into price assumptions are going to have an impact in terms of the share price of BHP and Rio. So although we are seeing strong growth coming out of China, what we have seen is a downgrading, this downgrade cycle in terms of growth expectations, and that's really had an impact on these stocks. Overnight we saw commodities being impacted, and not only was it comments coming through from BHP yesterday that iron ore demand from China was going to get to single-digit growth if it wasn't already there, but also China moved overnight to increase gasoline and diesel prices domestically. So there were concerns that that would have an effect in terms of internal consumption. So altogether, I guess all eyes on China. We've seen better news coming out of Europe and the US, and I guess now it's China's turn. And of course China has a big impact on the Aussie market because of our weighting in that material space.
And yet Fortescue closes up, Julia, about 2.4%, reaching about a 6-month high. Some suggestions that, as usual, we've seen some buying on the dips and people looking at some technical sort of positioning on Fortescue. I mean, is that what you put it down to? Because it is a one commodity player, iron ore, and it is pretty much a one customer player, China.
This is quite curious, because if you look at BHP, around about 50% of its earnings come from iron ore. If you have a look at Rio Tinto, about 80%. But Fortescue, it's highly geared to iron ore prices because it's looking at ramping up to 150 million tonnes per annum by June 2013, and yet we've seen the shares bucking the trend today. So really quite unusual, and that should sound an alarm to any holders of the stock, because it is quite a bullish signal when you're getting quite bearish sentiment around iron ore prices, and then you see a single iron ore miner gaining ground like that. So an unusual movement, and it is a good one to point out, and we'll be watching this stock very closely as well as the volumes to see what this unusual activity is being driven by. Of course, Fortescue has quite a few big shareholders on its books as well, so it'll be interesting to see whether we are seeing one of those big shareholders increasing their stake in the company. So one to keep an eye on over the next week.
Potential catalyst, as Kieran rightly says, so much money waiting to be put into the the equity market, for example. I mean, what do you see as the as a potential tipping point?
I think the earnings season in Australia really gave us a signal, because while we did see a solid earnings season, it was below expectations, and that means FY12 forecasts and FY13 forecasts were downgraded downwards. And when you see this downgrade cycle with analysts, then generally it has a negative impact in terms of prices. We're probably near that downgrade cycle now, and I guess the key is what's going to cause people to be more optimistic about the market and more optimistic about earnings. One of the key drivers could be the the Aussie dollar. We've got a very high Aussie dollar, which probably keeps some of the international investors out of the market, but also bad news for a lot of our exporters, which make it more difficult for them to be profitable in Australian dollar terms. And of course, if we do see the Aussie dollar fall, it's probably going to be on the back of more RBA rate cuts, which would also be a positive for the market. So the Australian yield at the moment probably attracting quite a lot of international investors to our government bonds, but certainly not to our equity market. And one of the catalysts could be higher earnings coming through, or higher earnings expectations coming through for Australian companies. And a couple of those catalysts, which are interrelated, could be the Aussie dollar as well as interest rate cuts.